Welcome to Digital Currents, brought to you by Morgan Creek Digital. I'm Xavier Segura. Each episode, we spotlight the topics and people changing the tech industry with a focus on AI, blockchain, chips, and big data. Thanks for listening, and please make sure to subscribe if you like what you hear. And remember, stay current.
Welcome everybody back to Digital Currents. Mark, we have been like two ships passing in the night, but I think we've finally touched land together. It's nice to see you.
Nice to see you. And you know, it's football season, right? So, and we went a little different shades of blue today. I appreciate you having my dark blue for Notre Dame this weekend. I'm actually on the road in Tulsa, Oklahoma, on my way to Fayetteville, Arkansas for the game down there, try to beat the ghost of Holtz, since that was his original stomping ground. But, you know, you've been all over the world gallivanting, you know, doing fun stuff that we can talk about.
Yeah.
It's really hot here in Oklahoma, so no long pants, so no pant reveal. So I'm orange in heart. But I do have some sock game reveal. It's the original, you know, Chancellor on the Brink about the Genesis block. Why? Every time we have one of these corrections and people start panicking and freaking out, and you got people like Peter Schiff saying, "Oh, you know, gold's not go. I mean, Bitcoin's not going into another winter. It's going into nuclear winter.
Oh no.
And you know, an ice age." And I'm like, okay, so you're celebrating rah that gold is up, you know, 40 something percent, and Bitcoin's only up 20 something percent this year to date. Go back just a few months, and for 1 year, Bitcoin's ahead of gold. So Peter can stop talking, but he's not gonna. But it's you know, welcome to Rectember. Although X, this, you know, even though we're down 8-ish% since last time you and I were together, and you know, we were hitting close back to the all-time highs at 117, 118, and now we're, you know, back at 109. And there's a reason, which we'll talk about, which is why today is probably the end of that pressure. Here we're recording on Friday the 25th. You say the 25th? Yeah, 25th.
I believe
and
so. We're at the
long story
26th.
short,
yeah,
26. If we ended today, this would be the best September in Bitcoin's history, which is interesting because we're up about 1%, and we're kind of flat over the last week or so. I'm sorry, over the last month or so. So it's not been horrible, but in the last, you know, week, it has felt a little bit bad. And there's a lot of sniping. Although it's interesting, I find crypto is not quite as active because it's been overtaken by AI. You know, that's, everyone's talking about AI. And we'll talk about some fun quotes in a little bit. But the one that I really think is interesting is nuclear.
Oh
right?
God.
Because everyone's saying, well, all this energy is, you know, necessary. So, you know, we better invest in these nuclear stocks. And there's this one in particular, Oklo, OKLO. And Martin Shkreli, you know, famous for, you know, biotech fraud. I mean, he went to jail for fraud, and he talks about it openly that, hey, I made a mistake. And but he's a really smart guy. I mean, I know people say, no, he's not. Objectively, he's a really smart guy. And he did this podcast with, there's this youngish, I don't know how young he is, guy who's become, I won't say famous, but a little bit popular in the, I guess, fintech Twitter world or financial Twitter world for being a growth guy, which basically means you hop on the momentum stocks and you tweet about them a lot. And so he jumped on these quantum computing stocks and nuclear stocks. And, you know, quantum computing stocks have gone crazy.
Yeah.
We can talk about that. But Oklo is this nuclear company. And the short story is it's a husband and wife team. First red flag. claim to be big nuclear engineers. Second red flag. They did study engineering. So, okay, they did. And the guy actually has written a couple papers postgraduate, but not, they didn't work at some big lab. And, oh, sorry. And, but the stock has gone crazy. And their permit application's been rejected. They don't have any revenue, obviously. So it's a pre-revenue company and $20 billion market cap. So he's been all over a bunch of these types of things. And I think it ends badly, and we'll see. But the Momo has been strong.
Yeah, no, I think it's one of those latest hype cycles. The idea and the appeal of nuclear power is so strong, Mark, that it has left this earth, right? We're talking about nuclear power for the moon, which, literally, that's usually what we talk about in our side of the world, right? To the moon. And I think, when you got to unwound things, you see why, this kind of trading pattern kind of makes sense. So for the regular listeners of Digital Currents, what's going on now shouldn't really be of too much surprise, right, Mark? Because September is always a pretty challenging month across markets. But we've spoken about this a lot of times. I remember we had a great episode, I forget when, maybe a couple of months back. We talked a little bit about this phenomenon that naturally happens with the liquidations of levered long positions and how traders are betting on price increases. And so there was a huge liquidation of over, 1 to 1.5 billion in crypto derivative positions that were unwound, right? So the options expiration is this week. It's around 22 billion in BTC options, and that might exacerbate volatility as traders are just, adjusting or unwinding their positions ahead of that expiration. So that kind of shifts one thing, Mark, that probably is a little bit newer that folks haven't seen on the sentiment. So things have turned a little bit more fearful. I think when we think about crypto, folks, we are very much a polarized group. We have some that are kind of always eternal optimists, and you have some like Chip that are perpetual pessimists, and that might speak to some of the volatility. But the crypto fear and greed index recently dipped below 30 to 100 for the first time since April. So that's signaling greater caution. But for those that have been listening, this recent shed of 2.5% is nothing that we haven't really expected. We have not been surprised by this for those that have been listening for a long time.
100% X. I mean, it's absolutely expected, absolutely normal. And this futures game is getting really big. And we've talked about this over and over again. And it has been the plan since the launch of Bitcoin futures in 2018. Leo Melamed of the Chicago Mercantile Exchange said very clearly in 2017, as they were getting ready to launch these futures the following year, don't talk to me about Bitcoin. We will tame Bitcoin. That's a really strong word, right? That's an interesting word to use. And what it means is if a market is left to its own devices, supply and demand, the more scarce an item, as demand grows, the price will rise. And it may even rise parabolically or quickly. Now, that also means if demand wanes for whatever reason, real or imaginary, whether it was the hard fork fears back in 2000, I think it was 15 or 16. And, that was real. There were people who didn't think it was going to work. And it did. Well, now actually talking about hard forks, there's this argument between the two sides, Luke Dash Jr. and I guess Jameson Lopp, amongst others, between censorship on Bitcoin. And basically, I guess to boil down the argument in a nutshell, Dash Jr. doesn't want anything polluting the Bitcoin blockchain, like artifacts or ordinals or, as he calls it, trash or any graffiti or so, whatever he calls it. But the idea that you can censor a transaction, which is essentially what that is basically saying that, hey, if I'm a miner and I want to charge somebody money to put their NFT on the Bitcoin blockchain, if there's block space, I should be allowed to do that. That's what an open and free market would say. So, but back to so we'll talk about that later. But this idea that futures were introduced to curtail essentially the total freedom of markets. Well, what do you mean by that? That sounds like something I wouldn't want. Well, the way it's presented is, well, for commodities in particular, and that was one of the interesting things. Be careful what you ask for; you might get it, right? We also, we don't want Bitcoin to be a security. Okay, so he classified a commodity. Well, now if it's a commodity, you can have futures, paper futures, that can literally create paper commodity. So in the oil markets, we've talked about this. If I want to sell you oil, I had to have oil. And here I am in the middle of oil land down in Oklahoma. I would actually have to have a little well. Like I can probably see some if I go outside and look a little bit. You have to own the oil in order to sell it. Well, when the futures comes along, no, I can just write a contract saying I'll sell you some oil at a future date. And as long as we settle up the contract, which is what's been happening this week, all those Bitcoin contracts for paper Bitcoin that people don't actually have that have been sold. So they buy the ETF, they sell the future, but the future price for most assets is higher than the current price, right? Not because people are optimistic. And so if you're selling something at a higher price than you're buying it, there's an arbitrage, and it's called roll yield. And so the future rolls down with this negative return, but you're short it, so you're accreting that positive return. And I love when people report, Millennium owns 2 billion of Bitcoin. No, they don't. They're short 2 billion of Bitcoin against it because they are a market neutral shop. That's what they do. They arbitrage the spread between assets. So all of that increased paper activity can put pressure, particularly short term, on asset prices. And I guess I got to move my screen a little bit. There we go. And I guess that's where we find ourselves. So today we got triple witching and a bunch of options expire, and then we can go back to more normalized markets next week.
Yeah.
Get ready for Uptember.
Exactly. Uptember. And I think, that's well said, Mark. I mean, many traders are using leverage to, increase their speculative bets, after especially the recent run up. So there's some of this where, as we always say, greed is undefeated. And I think if people see a greenfield opportunity, hearing
greed is undefeated.
Yeah,
unlike our football teams this year, greed is undefeated. but to that point, X, your focus on the leverage is the really important point, which is the future in and of itself isn't evil per se. I mean, it's a little evil in that even though you're not supposed to go naked short things, right? You're supposed to have an offsetting ownership of it to go short. That's the way it's supposed to work. In the futures market, particularly the big institutions can get away with being naked short. So that does put artificial pressure on assets. But the leverage in traditional markets, like if I have a stock, my broker may lend me a certain amount of money against that stock. Normal leverage, what's called Reg T leverage, 50 cents on the dollar, not a lot of leverage. Pretty, you can deal with that. Some brokers will lend you more, like 2 or 3 times. Now you think about it. If you buy an asset and it goes down 10% and you own it, you lose 10%. If you borrowed half of it, you've lost 20%. If you borrowed $2 for every dollar, you've now lost 67%. Well, you may have to sell to pay back the loan, and that causes that cascade of unwind. In the futures market, you can put 3% collateral down in some cases. Now, not Bitcoin, I don't think, but like in Treasury futures, 1% collateral, meaning 100 times leverage. So you get a 1% move, you're wiped out, completely wiped out.
I think one of the things too, Mark, that we've spoken about, that I think you could comment on with great authority is this shift that's happened between sort of who is buying Bitcoin and for what purpose, right? So the idea that now, and for the last couple of months, starting at the start of this year, the largest buyers of crypto have been corporate entities. And so
Yeah.
at the corporate
Yeah.
entity, you're kind of caught in this no man's land between how you operate in the digital economy and what generates value there and what just generates value in the stock market. So now I'm sure you've seen the common trend of stock buyback programs, which was very popular during the COVID, QE era, where there was just free money floating around. People didn't have to pay taxes, so they bought more stock. And now this is happening with crypto treasury companies. And so on the one hand, the buyback can tighten this gap by reducing the float and showing discipline, which investors reward, and that can move prices as traders looking to basically make a front run on a decent volume for demand. But buying more Bitcoin can also increase your exposure to the volatility. So it's kind of like serving two different ends. And you see some people have success with this and some do not. Like I remember Ton tried to buy a ton of its own stock. See what I mean? It went down like 7.5% earlier this month. So you're going to also see what the broader theme of why this is happening is, Mark, it's getting more and more competitive to own and run a treasury company. So they're trying to create differentiation strategies. And instead of creating a differentiated strategy that resembles what you might happen in a kind of a pure play digital asset type of environment, the differentiation is happening towards a conventional TradFi approach. So it's
yeah.
And if you
no, the intersection
buyer,
to your point, the X factor for Xavier, the X on this intersection between TradFi and DeFi and CeFi and the future of finance, Figure going public, the future of finance is interesting because someone said it best. They said, so wait a second, you're taking an on-chain asset and you're putting it in a TradFi vehicle, and then you're going to tokenize it and put it back on chain. Why? Well, fees, right? The tokenization of the original asset. Okay, there's fees there. And then the bundling of it into they call it a boomer wrapper, right? An ETF, but a security. There's fees involved there. And then there's the fundraising fees to get the pipe and the other things. Well, then to retokenize that financialized asset, there's more fees. So, and look, I'm involved in some digital asset treasury companies, and I'm a believer that the first step, a pure play protocol in a wrapper that makes it available to investors who, for some reason, either legislative, the one I'm involved in Japan, right? There's a legislative, it's against the law to have Bitcoin ETFs still, kind of like Vanguard, right? And I think it's Goldman Sachs too. There's a couple still in the US that you can't own the ETFs, but in Japan, you can't own the ETFs yet. And if you own Bitcoin directly and you sell it, they charge you 52% tax. If you own it in the wrapper and you sell it, you pay capital gains tax, 20%. So that's a strategic advantage for the investor to have this financialized product. Now, when there's no advantage, then you get a little dicey. And when you get levels of either leverage and or re-tokenization, then it does get a little messy. But ultimately, at least for a while, so long as not every stock, bond, currency, commodity, piece of art, private business, everything, right? The whole, $1 quadrillion worth of assets in the world, as long as all of those aren't tokenized and we trade on marketplaces like Figure Markets, we're going to have this intersection, right? In the olden days, there were no stock exchanges, right? There were no stock exchanges. There were no securities. So how did you trade? You showed up at the market, like physically, and you traded. You exchanged goods for other goods. And they figure, that's just a hassle. Why do I have to bring my cows all the way to the market? Why can't I process them on my site and just send you the finished product? And you send me a check. And I'm like, what's a check? We've never heard of a check. So they created paper money so that you could not have to carry the bag of gold or the bag of tokens. Well, actually, before, way back when, everyone had their own currency, right? You sold chickens, I sold cows. I had little tokens with cows on them. You had little tokens with chickens on them. That was just how the world worked. Well, then we got to the, regularized money, but we still don't have a world money. Now, a lot of people would like there to be one, and some people would say Bitcoin could be that. But as we went from analog trade to electronic trade, everything got securitized, right? Companies got securitized, bonds. If you wanted to borrow money, again, in the old days, if you wanted to borrow money, you went to a bank,
Right.
and they underwrote you and they lent you money based on the relationship and based on their knowledge of your business. Well, now you can issue a bond and you can get a larger. Well, what DeFi allows you to do is you can get money from anybody, anywhere in the world, instantaneously with no downtime, 24/7. I always do chuckle a little bit. American exceptionalism. We think our business hours are the right ones, right? So, try to do a transaction, particularly an international transaction, not during US business hours. Can't do it. They don't care if the market's open in China or Greece. It's not open here, so you can't do it.
Yep. One other trend, Mark, that I think is one that I'm calling early. I think we don't do enough self-promotion on this show. That's really not what it's about, which is kind of orthogonal to some of the alt markets, which are all about self-promotion. We love
you want to
that.
start shilling projects?
Well,
exactly. You can have the
exactly.
X coin. I know there should be an X coin. There really should. And
I
we
agree.
probably get sued by Elon because he thinks he owns the letter. But
yeah, we would do well, but it would all go to the attorneys, so we would kind of break even. But the trademark that I'm thinking is going to happen in a greater velocity is one story that maybe kind of went slightly under the radar last week, and this was some M&A that happened for treasury companies. So this idea that the barrier to entry to become a treasury company is not that large, and it's a continuing trend of folks realizing there is value in digital assets, particularly Bitcoin, and starting up entities to raise funds to buy more of Bitcoin and kind of try their hand there. So there was this merger that happened between two such companies, Strive and Semler, right? So basically Strive was the acquirer, Semler was acquirer, and that was all stock transaction and gave a 210% premium over the existing share price. And alongside that merger, Strive, they got a little under 6,000 BTC at an average price of 116K. So they are underwater now. And correspondingly, Mark, as you might expect, the stock is taking a beating. So I think in general, when we look at M&A, usually it's a bad thing. For the most part, the ones that get acquired, they do well, but the acquirer, or they can kind of struggle to realize these synergies that are supposed to happen over the 210% premium.
Yeah, well, the synergies never happen, but that again, the headline's a little different than the reality, and it's partly because of the way markets work, right? In the sense that so Strive, so Vivek Ramaswamy, right, ran for president, worked in the administration, then he, and he's been a Bitcoiner for a long time. Says, all right, I'm going to create one of these digital asset treasury companies too. Now his is a little more robust in that he doesn't want to just own Bitcoin. He wants to create a financial services company based on the Bitcoin standard.
Yeah,
that is a grand vision, and it's going to happen. But in the short run, it's a Bitcoin treasury company. So he did a pipe, he raised a bunch of money and bought some Bitcoin. Well, because he's famous, if you're famous and you're involved in a stock, you get a premium, right? I mean, that's the way the world has worked for some period of time. And also, certain companies, MicroStrategy was first. They traded to a premium above the NAV. So if you think about it, you own these assets, and these assets are unlike a business. A business is an ephemeral valuation because you're doing a discounted stream of future cash flows. Well, but you don't know with certainty that the future cash flows are going to exist. Now, in most cases, you can hope, but I mean, let's take a silly example. You invested in, Acme Buggy Whip Company, and they're at the top of their game, and there are buggies everywhere and horses, and they're selling, and you buy in. And then this invention comes along called the horseless carriage. No reason to have buggy whips. Okay, now it's a problem. So you could try to sell it. You could try to repurpose them and say, oh, well, you could beat your kids with it. No, I'm just kidding. Well, actually, back then, that was okay, but it's never been okay. It was more normalized. But you could try to repurpose. You could try to repurpose the product, but at the end of the day, the future cash flows went down, the value of the company, and the company eventually went away. So same thing is true here, in that the future of a Bitcoin standard financial service company is great, but there's no real there. It's like that Oklo company. Yeah, we're going to build this nuclear reactor with repurposed materials and this new technology, but we got rejected. But don't worry about that. We'll dig up some dirt in an open. This was crazy. They did a photo op of like a groundbreaking of nothing. Like our reactor. You can't build a reactor because you don't have permission. So anyway, so you can fake stuff for a while, but at the end of the day, Strive went public with this value, and the value of the underlying assets, okay, the Bitcoin has a value. Now, if you can borrow against your value, or if you can issue new equity, the ATM that Saylor and others, you may trade at a premium MNAV, so market value to NAV. 1.4, 1.5, all good. That makes perfect sense if you're able to borrow or issue new stock. Good. The problem is some of the treasury companies, they had low float. So a lot of it was owned by insiders, and there was low float. And so there's lots of supply and demand. And so the premium to NAV went to silly town. And eventually they all come back down, but for a short period of time, it can go to silly town. So the problem here is that Strive was selling at 4 times MNAV.
Wow.
Okay. So $4 for every dollar of Bitcoin. Now they have this promise of building the rest of this company, but they don't have anything there. Semler had this business kind of like MicroStrategy. It wasn't really doing great, and it had some cash flow, but it was probably on the downside of that buggy whip example. And so it's like, I'm going to turn into a Bitcoin treasury company. So it started to go back up, but it could never get above the value of the Bitcoin. So people were ascribing a negative value to his core business, which is probably not that inaccurate. Long story. So Vivek comes on and says, I want to buy your undervalued Bitcoin, 85-cent Bitcoin, which any of us would want to do, right? If I could buy a Bitcoin for 85%, I would do that.
No brainer.
So long story is, but Semler's, he's a smart guy. He says, well, no, you have to pay me more because you're giving me stock, and your stock is overvalued because your stock trades at 4 times MNAV and my stock trades at 0.85 times MNAV. So I should actually go up to 1. You should come down to maybe only 1.5, but arguably maybe even to 1. So they struck a deal so that Eric got a bigger chunk. And then Semler's share will actually be more normalized relative to his ownership. So the big premium, it's not that he got cash, he got stock. So his premium will get compressed. Anyway.
No doubt. I think that's beautifully summarized, as I knew you would, Mark, be able to speak with credibility and precision on this topic. And now kind of shifting gears a little bit from decentralization, that is crypto and Bitcoin, to centralization, which has become AI. Oh my goodness.
Ooh.
Let's talk about some of the latest deals that are happening. From my beloved Big Red having the monster day on the idea of they were once a value stock at a paltry 15 times earnings, and they have now left that category at 40 times earnings to become something else. Why? Because of a fresh potential $30 billion commitment coming from AI. But if you kind of dig down a little bit, this is part of, I don't want to call it a Ponzi, Mark, but there are a lot of companies dumping into open.
No, call it a Ponzi.
This is circular.
Call it a Ponzi.
This is circular.
The moment you commit to pay something that you don't have, that's a Ponzi, right? If you're a household, the moment that your interest expense on all the money you borrowed exceeds your revenue, your income, you're a Ponzi. You have to rely on the kindness of strangers to bail you out. The moment you're a business, okay, or a government, like our current government, where the interest expense starts to creep up on you're a Ponzi. And so the crazy part is, so Oracle, which is already super over levered, right? They have a bunch of debt that arguably they can't pay back. They can service the debt right now, but there's no way they could really pay it back. So that's the first problem. The second problem is the customer, the person who said they would pay the $30 billion, doesn't have it. OpenAI does not have $30 billion. They don't even necessarily, I don't know for sure, but I don't even think they have the first $6 billion.
Well, here's the first part of the Ponzi, Mark. The first part of the Ponzi is, if you can get somebody to buy in beneath you, then you can kind of keep the whole thing going.
What? No, absolutely.
Nvidia, right? So the Nvidia $100 billion investment, right? The $100 billion invested into OpenAI is really a structured deal, which basically is $10 billion for every gigawatt of OpenAI data centers that are going to be built up over the years. And so OpenAI is planning to purchase, 4 to 5 million Nvidia GPUs. So on one hand, Nvidia is giving OpenAI money. OpenAI is then taking that money and then buying more Nvidia chips. So you're seeing this whole circular thing, and therefore gives OpenAI some revenue to put it into the coffers of companies like Oracle. Gosh, I hope that TikTok deal works out, Mark, because I'm seeing a little bit of some warning signs here.
Well, look, don't even take me down the rabbit hole of how Larry Ellison, who has no experience at all in media, can take over. I mean, I guess, we all know why that's happening. It's a surveillance tool. So
and it is the most Chinese thing of all, Mark, because in a twist of fate, the Chinese tech scene was always maligned for being an imitator rather than an imitator. It made rather a fair or foul description. That's what it has been for a long time. But now, not to be outdone, the U.S. is creating its own U.S. copy version of TikTok, which was a copy of a copy. So I'm confused.
Oh, no, it's crazy. But the problem for this nonsense that's going on between these big tech companies is, so Nvidia says they're going to give OpenAI some money, as long as OpenAI puts it in either Oracle to buy Nvidia chips or Nvidia directly to buy chips. Okay, well that's circular. So that's the same dollar. But worse, while that's going on, OpenAI is still chewing up, literally lighting on fire, 20-ish billion dollars a year, because every time you type a question into the system, it costs more than you pay it. Like, I don't pay anything. I use OpenAI every day, just about. I mean, ChatGPT just about every day,
Yeah.
but I don't pay for it. And when I reach my limit, I just stop using it. So, and I know there are people,
Right.
oh no, they're power users, and yeah, and they do have revenue, but their expenses exceed their revenue, so they are a cash incineration machine, and I don't understand the logic. It's like when Facebook or Google were cash incineration machines, it was because they hadn't turned on the ad monetization yet.
Mhm.
So if you're telling me that the plan is that this supposedly independent tool, this thing that, with no bias, even though it has bias, but this independent tool that I'm using to sift through information is now going to have ads and is now going to have the SEO problem where it's going to serve me whatever pays, I'm done. I'll never use it ever. And I'll certainly never pay for it. So it's different. Like in Facebook, the convenience of having something to talk to your friends and post some pictures, that's not really providing me anything that I need in my life other than fun and interaction. And so you're going to serve me ads for the privilege of doing that? Fine, whatever. I've actually trained my eye not to look at the banner ads and all that stuff. In fact, I know, like when I'm playing something like a game on my phone and it starts to serve an ad, I actually go do something else for the 5 seconds. Like literally, I'm not staring at the ad, so I don't. Anyway. But
Well,
but
that reminds me, because you're a gamer. You remember those whole like Nintendo gamer breaks, where if you were playing for a long time, they would say, "Go take some fresh air. Go and get
yes,
outside of your basement." And that's what the ads have become for you now on your phone.
no, perfect. But ultimately, the challenge here is, and this goes back to power, and every estimate of every new technology does the linear, exponential acceleration forecast,
Right.
right? And you can go back in time, automobiles, based on current miles per gallon, we're going to need so much oil. We'll use up all the oil in the world by 2010. We didn't use up all the oil in the world. There's plenty of oil, because what happens is technology improves, right? So we get more miles to the gallon. An alternative technology comes in, and some of the cars now run on other things like electricity. And so this idea that they say, well, based on the current AI spend, we're going to have this many data centers, and therefore they're going to use up all the power in the world. Now, the reality is electricity prices in the US have doubled. So here's the thing. At what point, what's the friction point? I know what it is for me. The problem is I don't really have an alternative. Like I say, what's the friction point of where the electricity bill gets so bad that you have to curtail use?
Mm-hmm.
Like, what will you turn off first? Well, I'll certainly turn off things that I don't need, like entertainment or, homework help, because I don't have to do any homework anymore. But I do think there'll be a backlash at some point if a small number of people are getting super rich on the back of the masses by selling them a product that they have to use, but in order to use it, everything else in their life goes up in price. Okay, that's the inflationary, problem that we have. Inflation is just theft from the masses to the few. And we've all seen the picture of, the Mag 7 getting all the return versus, the 493. So I'm a little concerned, but I also don't think it's going to happen.
Yeah.
in the sense that in order for this deal that was announced between Oracle and OpenAI to actually occur, forget even the Nvidia one, which upped the ante even on top of that.
Jeez.
For just the Oracle one, the 30 billion,
Mhm.
the amount of power required is 2 Hoover dams. And last time I checked, we haven't built 1 Hoover dam since Hoover Dam. And
Yeah. We're not
sorry,
adding, you only have 7 wonders of the world, right? Like, so there's a fixed number on that. And if those that can make it to the Hoover Dam definitely do, I'm a science nerd, so I love that stuff. 3 football fields width-wise of concrete, Mark. 3 football fields. And it's
no,
just insane.
it is a wonder of the world. And but people are saying, well, then we'll do nuclear. Okay, show me a new nuclear plant. We haven't had a new nuclear plant in 40 years,
Right.
45, something like that. Show me a new nuclear plant, right? And we've been chasing fusion forever. That ain't happening anytime soon.
Right.
And so fission, I mean, there's a reason that not the Hoover Dam, but there's a reason, those big cooling stacks are really thick concrete. There's some bad stuff that happens if nuclear material gets released into the wild. So I admire innovation. My whole life has been focused on backing people who innovate. Okay, I love that. But when it starts to exceed, well, actually, in 2 weeks, I'm doing I do this monthly thing around the world, right?
Mhm.
And it started because I literally took a trip around the world, doing research, and I said, "Oh, this is interesting. I met these people here," and so it just kind of caught on.
Right.
And the title of my one for October is "Willing Suspension of Disbelief,"
Mm.
because I
Right.
think the markets have reached that point, right, where they don't care that this Oklo company doesn't actually have a working plan for a nuclear reactor. Doesn't matter that they've been rejected by the nuclear regulators. Doesn't matter that the people who started it don't really have the engineering chops to get it done. Or in quantum, right? It doesn't matter. That's the one. And I conflated 2 things. Skrelly really, his video was more about quantum. And he
Mm.
was eviscerating Shay, not on Oklo, which is he is definitely negative about that and short that, but he was eviscerating him on quantum and this company IonQ, which the CEO from Ionic, this is great. And I know people at the beginning of the show are going to be yelling, you're talking about the wrong thing. Yeah, I do that sometimes. I conflate things. So, but Ionic, the CEO, got up on television on CNBC and said, by 2027, our chips, which he doesn't have any chips, there are no chips, there are no quantum chips, there are none, okay, said our chips will make Nvidia look obsolete.
Bold statement, Cotton. Yeah.
And he said, and we look at a minimum like Cisco, okay, which was the darling of 2000,
Right.
and a maximum of Nvidia, because our chip will make Nvidia look obsolete. But you don't have any chips, and here's the thing. This is one of the funny lines from Skrelly was, so if I ask you to add 3 plus 2, you can give me about a 99.9% accurate answer that the answer is 5. Okay.
Oh.
Now, I'm not an engineer, but I'm 99.9 means the error term is big. That's a big error term, and if you multiply that over and over, like what matrix math does, right? It's doing thousands of calculations simultaneously. That's why GPUs process faster than CPUs. those errors compound
Exactly.
and stack. And so pretty much you're telling me that you can't even generate anyway. But it was
Yeah.
just the way he says you can't even add two integers better than classic computing, but you're going to obsolete classical computing in sub 2 years.
Right.
Okay.
So maybe bringing it back around, Mark, to the idea of power and energy in AI. This week's chart of the week nails this idea, and thinking about, what it could mean for the future, caveats of innovation aside, just kind of where we are today, in a chart that was shared by the IMF, which I think is an interesting person to create this chart. I'm going to share my screen.
Interesting.
Exactly. There's information
The
content
kings
there,
of
right?
leverage. The kings of leverage.
Exactly right. Let me see if
Actually, you know
this
what? The
works.
IMF is the original CZ. So what I mean by that, this, as we started talking about the liquidations in the Bitcoin market and why. And so if you borrow a bunch of money against a volatile asset, when the volatility comes, you will lose that asset, right? What happens is when you're levered long, the lender seizes your asset. So it's a way to acquire Bitcoin at a cheap price. The IMF was the originator of this strategy with countries, nation states, right? It would lend you money, most times to countries that they pretty much knew couldn't pay them back. So then American interests could go seize the good assets. So it's a pretty interesting strategy.
And a great book, which I'm sure is on your bookshelf, Mark, Confessions of an Economic Hitman by John Perkins.
Oh my gosh,
which describes this and should be a movie, if not already, the screenwrites are already sold. Definitely check that out. And I think within this, Mark, what we're seeing here speaks also for those that are on audio only. I remind you every week, check us out on YouTube. Those numbers are growing, so you can see the chart of the week, where we're recording from, and all the other fun bits. But what this chart is kind of underscoring, Mark, in my opinion, is a couple things. We mentioned some of these mounting power and cash constraints. So you got 13 billion in annual revenue, but 400 billion in spending commitments from OpenAI, right? So they're relying upon these equity deals with Nvidia and Oracle. And so at some point you're thinking about, are the chickens going to have to come home to roost? Well, where are they right now? So when we kind of look at these power consumptions, these are all data centers combined that are using the power as much as some of the world's largest countries today. Now, France is on this, but France is a little bit of an outlier, in my opinion, Mark, because 40% is nuclear. Although, the rest on this list, obviously, I always think China is hysterical on this because they always give us a different magnitude in there. But if you kind of continue to extract on this, the data center capacity and demand will continue to increase. I don't think that's that's not a controversial statement. Now, the question about it is, where is that kind of tipping point to where it's no longer worth the squeeze that's required to kind of power some of these machines? But I think what charts like this speak to me, Mark, and I'd love to hear your thoughts in a second, is, awareness kind of allows us to know, are we on the right track? And what can we do as consumers and as investors in technology to understand that these trends are happening? Yeah, we know data consumption is increasing. We know that the draw on the grid will be increasing. And especially as more economies move from developing and emerging to already larger, more services-driven economies, that consumption will shift yet again. So, Mark, when you see this speaks to some of those things that we're talking about, where now OpenAI has effectively become almost like its own country in terms of some of its energy supply, certainly the economic heft that it's influencing in the markets, but now we can see it.
Yeah, 100%. Look, I mean, what's happening now is an example of, first world problem, right? When you have excess of something, excess oil, and you can produce as much oil as you want and give it away for free. You can have people drive lots of fancy cars. You don't have to worry about fuel economy. Everyone can have a muscle car. And it was kind of like in the 70s, right? We thought we had all the oil in the world available to us because we had these great deals with Iran and Saudi. And so we didn't care about gas mileage. We cared about power. And it was fun. It was a fun time. And, those early Camaros were boss, man. And
great.
Then what happens is people are, oh, geez, we're going to start running out of oil. So we better fix the tech. And again, first world, if you have good engineers and good innovators, they'll figure out a way. And so now cars go a long way on the same amount of gasoline, and basically gas prices, right, in nominal terms are higher, but in real terms, they're really not, right? And I think the same thing is true of electricity for sure. And I will argue, and I've argued this for a long time, fire might be number one, but electricity might be number two in terms of the most important. Now, indoor plumbing is right up there because without it, right, we'd all die of dysentery and things like that. But electricity is the thing that we all really can't live without. Like we could even live without fire because now we figured out how to cook with electricity. But without electricity, most of us would perish pretty quickly. So this is a big deal. And I'm going to take the under on building more and more and more data centers so that we can ask a transformer model questions and get answers faster than if we had to go do the work ourselves. I think that is a useful tool. And I thought that the other thing we could have is the chart of the week that we don't have, but it showed, I think, like 80-something% of AI machines are in radiology.
Oh, wow.
Today, yeah, today, 80-something% of the AI
computer vision,
things like physical things are devices. Device is the word I'm trying to think of. AI devices, AI-powered devices are in the medical imaging. And I guess like 10 years ago, somebody said that you better not get a job in being a radiologist because you're not going to have a job in 10 years. Well, there are more radiologists today than ever.
Wow.
And we actually have a shortage of radiologists because the AI-aided device isn't replacing the radiologists because it actually can only do things based on all the previous, like it can't see new things, which is what a radiologist's brain does. It says, oh, that looks a little different. Maybe that's not advanced enough. So, but it is making radiologists better. Our cure rates are going up. Our intervention rates are getting more normalized. So that's interesting, right? It's not less humans, it's more superhumans.
Yeah.
And the tool, and so ultimately, I believe, like DeepSeek, when they couldn't get the best NVIDIA chips, they're like, well, then we'll devise software to make our system work better. Or we'll sample other systems, right? People, oh, you can't do that. Like, well, but that's what you do, right? You train your models on all the data, like Getty Images, which is suing them. So people are creative. Human ingenuity, to me, is the most powerful force in nature. And so I don't think we're going to hit this level of data center need because I think someone, and hopefully it's one of our companies that we invest in, will come up with a way to get the same compute with less power demand or less heat so that you don't need as much power to cool. So there's all of this innovation that will happen. And so I think directionally, this is a good point, although there's double counting here, right? Because the data centers happen to be located in China, the US, India. And so, they never adjust it.
A little bit of a chart crime, but I think
not tiny. That's a tiny chart crime. Right. I mean, look, the order of magnitude is real. But But again, here's China. China has put more nuclear online in the last, I think, decade. I can't remember the exact stat, but they're building more nuclear than we have, right? Mm-hmm. And our nuclear is 40, 50, 60 years old and probably reaching end of life, and we aren't commissioning anymore. Well, they realized that in order to, they moved 700 million people from poverty to middle class. In order for the middle class then to move into the upper class, you need to electrify. And that's what they're doing. Mm-hmm. And they're really good at it. And, you know, they also are good at solar, and they're good at, you know, core technology, and they're good at the innovation around AI that will lead, like the story of the Transformer is incredible. And I guess there's a book being written about it now, or about the original Google team and our invest in our company, Grok. You know, the guy was there, Jonathan was head of that team, and then he left to start Grok. And I think all 8 of the original Transformer team at Google have left. Oh, wow. And they all work in AI, and some of them have been super, super successful. But it just goes to show that innovation came out of nowhere, right? It came out of this problem that it was so hard to do certain search applications or indexing applications, that someone had this, and I don't remember which one of the 8 had this genius breakthrough, but they literally said, what if we tried this? And then the Transformer was born. And now Transformers have evolved into LLMs, but from LLMs, we're going to get, like Grok, the LPU, language processing units, and that's going to change how Transformers work. But then you got Cerebras coming a different way with, you know, a chip or a system on a chip, like a big giant wafer. So anyway, I'm rambling about innovation, which I think will solve most of this. Now, it'll create other demands, and there'll be other opportunities. But at the end, innovation is undefeated as far as I'm concerned.
Well said, Mark. And I think it's just wild to see where we already are, where the data center usage is as big as France and Germany and projected to grow. So I think that's really where the economic opportunities will be in that innovation. So perfect place to cut it, Mark. And I'm glad we can finally rejoin after a brief hiatus. I'm back from around the world and as excited as ever to continue exploring those investments, and of course doing the show, which I love doing every week. So we'll remind our listeners, as always, rate, review, subscribe, and as always, to stay current.
Thank you for joining us this week on Digital Currents. Check out our links to our website and social media in the show's description box. Please make sure to subscribe if you like what you hear. And remember, stay current.
This podcast should not be construed as investment advice nor solicitation for the sale of any security, advisory, or other service. Investment themes and ideas discussed may be owned by funds managed by the host and podcast guests. Any conflicts at the time of production have been mentioned by the host but are subject to change. Listeners should consult their personal financial advisors before making any investment decisions.